You love to see it. You love to see it. The dirty Dow. 1 minute to close. We'll break the old shebang down. See what we get here. Should have asked in the poll earlier through the Dow instead of using the SPY, but that's alright. Seconds there. See how much comes in here on the overall through S&P, Nasdaq. See what we get in after hours. I think there's gonna be quite a bit of push here. Let me turn the after hours on. Probably gonna be pretty disgusting. I'm not gonna lie. Let's see. I don't think TradingView is gonna give us the data well. Let me look on IB. That was 0.5% in the last tick. Fucking gross, boys. Gross. Okay. All right. Welcome back. Welcome back to the show. Okay, let's start with from the top. This morning we had yields doing a bit of a dance. 2-year was rising pretty quickly. 10 years were down. We got a recording from Yellen from yesterday saying that we're going to need to increase interest rates quicker because of the overheating. I've talked about this. I do think that Powell saying that the inflation right now is transitory is true in its own way, but it doesn't change the fact that we are sort of booming right now. And yes, we've been at low interest rates for so long, but the difference is that this spending is all coming at once, right? We've had trillions of dollars spent in the last year, and now we're about to do another 4 trillion again in the next few months. Not to mention the Fed and everything else increasing money supply so much. There is a point and I think it's done purposely, the way that Powell's speaking and then Yellen saying the opposite, and then how everyone else, all of us here in the market in between, are reacting and trying to push things differently to sort of shape our own prerogative. The one thing that's consistent is that everything that has to do with, when we sum up the value side, right, is that no matter what, the value side gains, right? If interest rates get ramped up quicker, value is going to appreciate because of that, right? Banks love higher interest rates. If there's inflation, value is going to appreciate because value does not increase in terms of appreciation because it's not growing earnings to earnings. Earnings are the same every quarter. Growth grows every quarter, right? But if there's inflation, then the economy, more spending, that extra demand is going to cause value to increase, right? So it's a win-win. This is where, when we look, it's so funny to look at it in hindsight and go, well, duh, of course we should buy that. Why do you think this is the thing that we've been positioned for fucking months, for this whole year, right? Since the election, this is what we've been positioned in. It's for days like today. It really is for days like today, because today you can make a lot of mistakes, I think. And, I made some mistakes pulling the trigger on a lot of things, but I was able to get the bottom, on a lot of the mega caps, and I'm trying. But the only reason I'm able to even make an attempt to try to catch some of that growth fucking pullback is because I'm fully positioned through value. And there's nothing in this sort of any of this position that screams for you that you need to do something, and you remain a buyer. You remain a buyer, and it's look at this fucking chart. It's laughable. There's like some comedy there. It's really, there's a lot of comedy, I think, when you think about it. And we go from the open in the way that we sort of moved. and also how I knew from the beginning when we looked at those yields what exactly was going on there. We knew we were going to get some sort of rotations from tech into value already anyway, but the way it sort of plays out, it's just so funny to see when it actually it goes the way everyone thinks it's going to go, right? This sort of price action is exactly what should be expected. The only thing that we didn't that's even more of a surprise is just how funny this last push is at the end of the day. That means again, that means the you know what the end of the week is going to look like? You know what tomorrow's going to look like? What do you think there's whips for, right? We're all-time high still. We're still in the all-time high. We're literally in the all-time high, and tech just sold 2%, but it's not going to matter tomorrow probably, right? Even on the growth side, I don't think it really matters. I think it discounted through time, but not through value. This candle's fucking disgusting. It's disgusting. I mean, at the end of the day, if you're within this area, again, we didn't gain anything today. We didn't gain anything today, but the fact is that you didn't lose anything. That's the most important factor, right? If you're positioned here, you didn't lose anything. But if you look at the overall market, it looks like shit was down. Tumultuous, right? Not if you're positioned fully through this idea, right? And that's what's important. Now, of course, if we go through some of the things, you gained on energy in a lot of respects. On the bank side, you gained most likely in a lot of areas here. If you played industrials, you probably gained quite a bit, especially if you did things through the commodity angles, things like steel, X. I'm sure most people here played this because I sort of made it apparent in chat that from Friday, this has been again, whether you took this because it was a weekend trade or if you took it on the pullback this morning, this is disgusting. It's a trade that, again, I think I mean, I don't know why I say we, but I think I have a really good understanding of the moves on this chart. And this is kind of, this pattern here already is, I've talked about this a little bit. I think it was 2 weeks ago or so. I talked about this bottom triangle idea. Instead of going with a continuation idea, right, where you have a continuation and sometimes you can rack this up as a diamond, continuation diamond. I think of it more as this downtrend into the breakout here. And this idea has really paid off a lot. It's kind of a newer idea and concept that I've been utilizing a little bit more due to how bullish we are, but still having some violent sort of price swings that will wipe you out on options anyway. Because again, these are, I mean, these are very large candles overall, right? And so this idea helps a little bit more thinking about it in this way, in the way that you're climbing in. Like, I mean, this trend line here is disgusting, right? This trend line here is disgusting. Look at the wick touches through here. That's a strong ass trend, right? But this is how a lot of the market is right now. This very strong higher low scenario across the whole board. That's really what solidifies this value idea. And if we look through, again, there are things that really gain today in that you could take advantage of. Retail stores from yesterday held. We had continuation on the transportation side, charts that look like this, that they really stick out. I mean, it's pretty obvious what's going on there, right? These stick out a lot. And then as you go through, again, it's further industrials, it's further steel, it's very value oriented. This chemical sector with even just the Dow, in the Dow, looking very strong. There were opportunities to press on today. And this is where what I did from the open is that we had that pullback. As I was trying to capture some of those, again, we'll talk about growth tickers here in a second. As we were capturing, I decided to ramp up and sort of double up my value sizing. Again, sort of, if there's a rotation, we know what's going to happen. And so you take advantage of that. These present opportunities, right? And I talked about this yesterday. This red that we're seeing as we travel through all-time highs presents opportunities. And at the day like today, where it's not going to amount to anything on the week. It will amount to nothing. When we look at that chart, it'll amount to nothing. But by buying on it, it amounts to fucking everything. Where you're going to get a trade that by buying on a little bit of a dip today, or if you bought things that were still going up, right? Even if we look at, just use X as an example, that move, right, as the market's coming down is larger than if the market was, for instance, trending up, right? Because there's fear involved, there's selling. And so there's pricing that as the market comes out of that low is going to be significantly higher when it does. And so you're buying at lows that it's significantly lower. And a lot of the time it's just that volatility that creeps up, but that volatility is discounting price instead of increasing price. And as soon as it flips to the positive, that volatility all of a sudden becomes a very big premium, right? And that IV is significant at that point, and you're getting paid a lot. For instance, that X trade, I'm 100% on the X trade from where I doubled up today on just the trade from today. So the money from Friday to here, and then as you start to add this up across the whole board, if you got exposure to any of these ideas since last week, retail stores from yesterday, even retail stores that broke even today gained a significant amount. And again, this is the power of just sort of holding in a position in a time frame that is going to gain based on the volatility. Volatility spiked today a lot, right? And some of these positions even beg to be possibly transitioned because, again, if you gained a lot today, you're going to want to push that, but you might have got quite a bit of profit. Now let's look on the other angle, right? It's one thing that things go right. A lot went wrong, right, on the tech side. So let's talk about this a little bit, and also how being confident to take this low trade was pretty damn good. First of all, on the tech side, we saw tightening. We sort of use this angle through semis, for instance, right? A tightening, and we expected some further upside. That's where a lot of this comes in, right? Instead, this tightening led to selling today, which again is coupled with Yellen's comments of higher interest rates, which again, higher interest rates discount growth, right? Again, we usually see it through yields. Yields were, it was just the 2-year, which again, now it's not going to amount to anything. And this is where also, if none of the other bonds were rising in yields, so obviously no one really cared. We were instead just doing it through equities. So we see the selling start, right? Now, think about it in terms of the overall here. Again, it looks like a lot, but where it's starting from is this pre-market action, and we're still right next to the all-time high, especially when you look at the SPY. We're still right there. Now, this got pretty, it did get to a position where, again, even I bought on this first trend line mega caps. So on the growth side, when we're talking Apple's, Microsoft, Google's, Facebook's, all these, right? I bought on the first pullback here. And now even myself, I'm like, this is probably it, right? Now this continued, and we do have another level here. This is where the NASDAQ lines up as well. And everything has support here. If this broke, I would be selling all those, right? Now at this point, you're either still in long positions, or you've taken profit, or you definitely have gotten stopped out of any new growth positions, right? There's no way that anyone has short positions through this last week and a half or so, right? So these are new growth positions, right? This is where I bought the next, so I get stopped out, and this is where I bought the last bit. Things like Microsoft were able to get, were stopped out early and then came in. Things, again, Apple, for instance, was able to hold. Google was able to hold in a different way. They were all a little different, but basically this was the low overall. When we look at sort of the NASDAQ here, if this is the low here, then this is a great spot because we bought on some fear, right? This was quite a bit. I mean, when you put it from the close to here, we're talking about almost 3%. It was like 2.5% basically on the NASDAQ for overall. It's quite a bit of a move. It's important to be able to buy here even after you get stopped out, because the difference of buying here until waiting or waiting until tomorrow is probably more than you can afford, right? It turns into a different trade. There's nothing wrong with chasing and capturing, and we again should expect price to continue overall through our bias right now. Again, we'll have to see what tomorrow brings, right? And and I think all trading should be done through value first. But in terms of trying to capture this move through mega caps at least, I see no reason why this is not the perfect spot. And when you think about it, look at the way the market traded from this area. I mean, to get this sort of move here, there has to be some belief, and I would say this whole move here is just a discounting through time. It's just a discount that we expect and we have expected, and it doesn't amount to much, right? It's not a loss of value, it's a loss of time. And through that, you can buy here. And if you did, you're going to find out tomorrow probably, right? Again, the value side, it's hard to even compare because the consistency and not having to lose here and have to make, again, not having to take the risk here is the biggest thing. Is that 90% of my portfolio, I don't have to take any risks. I'm just in, and then I can add more. Here, I'm getting stopped out. I'm fucking getting beat up. I'm trying to find, right? You're trying to find positions. It sucks, but that's the part of the fucking job is to continue to try here and to have confidence. And this feels good here. This feels good here. And so we'll see how this lines up for tomorrow. There are a few different growth trades to point out. Things like Shop here, I think is a very good early pull, pulling the trigger here. Now, when I first bought here, I thought this was it. We get almost 2.5% on the first bit. I mean, I thought we were going, and I thought we were whipping here. This came back down into support. This finished off very nicely. And that makes me feel very good about a trade like this, which I talked about this earlier. We're not in a position to wait until open. We're using this line of the best time to buy was yesterday. So this was yesterday's trading. Now, this was a good buy today, I would say. Again, this might get wiped out tomorrow. But from here, if this is our low, we get the low, right? And the only way you're going to get that is if you make a trade. And there's a lot of people that sat on the sidelines because you can tell by that closing action that spread was moving very quickly. That means people were like, ah, shit, we're doing this again, aren't we? Right? And growth is going to be like this. Growth is a little bit more volatile, right? We're gonna compare those charts. You're gonna look at energy and banks and look at the industrial side. And it's just been a one. And also, I'm going to speak about healthcare in a second. It's just a straight line, right? It's just a straight line. Growth is all over the place, right? And different companies have different moves. Every single earnings blows it out of the water, yet here we are, right? Selling after earnings. A lot of these things don't add up, right? A lot of them don't add up, and it's just technical. We're just technical. It comes under support, we buy it, right? That's it. And so again, today's a good day to learn because you go back and you go, oh, I just buy. You can do it every day. You can literally do it every day. You might get stopped out the next day. There's nothing wrong with doing it 100 times. You get paid on it once, it'll pay for it, right? And that's the difference. Now, of course, you need to be positioned in your portfolio to be able to take those risks, but the probability is still significantly on your side. And even looking at a day like today, we can say that the NASDAQ was down. We can say the NASDAQ was down 2%. But if you bought it on the dip, again, you didn't need to perfectly time it. It does not need to be perfect. It does not need to be. If you bought anywhere in this wick, right? Anywhere in this wick, you're up or break even so far. And if we swing up from here, then you're in profit. It doesn't matter that the average looks like this. It doesn't matter what the chart looks like. It matters from where you entered, doesn't it? And so, again, this is where this is an opportunity. It's not a negative. And this is, again, a reaction to an idea. And that's why we're trading through the very bullish ideas first. And we've done that very successfully. And then when we look at things like this, we know growth in this tech side is the more opportunistic sort of volatile side where we're taking this on swings. And we saw that today. And now we're going to find out tomorrow, the next day, really by the end of the week, what exactly everyone thinks. And it's going to definitely be decided very quickly. People are not going to let, again, this is where, do you think these companies that have buybacks planned are not taking advantage of any dips that come in, right? It's going to happen, right? Now, One thing to note is things like travel, which we already knew was short-term volatile on, again, this is like the in-between, but it is about consumer spending and all this. It got very affected by the average here. This is going to be an interesting space because this trade was going well. We've taken multiple different chances, probably got stopped out on a few of these different trades. When you look at it overall, this sort of thing got affected by the average for sure. These kind of trades can definitely get some demand out of basically nowhere just because of the way the market traded. It's hard to tell what exactly and which area is going to get it the most. I like the casino side a lot. We saw the casino services doing quite a bit of moves. I took this win trade. We'll see. I bought it through here in the wick. We'll see what this looks like. There's earnings here. We'll see if there's any move. I do like this angle a little bit. And again, anything on the consumer side, we've already traded through retail. We've seen it through transportation. These different ideas looking very bullish. Everything reacting to the economic numbers. And again, the thing is here is that growth is being negatively affected by interest rate ideas. These are not solidified ideas. They may not even touch rates for years, right? But value is still going to gain through all that, right? And so we can play through short-term volatile value, which is travel. And we've been doing that. And then moving from there, look towards, again, these supply ideas, which we think of semis here. When we look across at all of these, this is a great entry here again. Now, I took this trade yesterday on AMD, got stopped out, took it again today. I feel very comfortable with both of these trades here, right? Whether it's this support or this support, these kind of trades, nothing changes. All you're getting, look at, we bought this here, had to take profit, and I wanted to buy it every single one of these days. Now what are you getting? Well, look at, you got a discount. This is a significant amount, right? You're getting a discount and the upside is the same. That's the biggest thing here. The upside is the exact same. Now, this chart is kind of disgusting, and I'm going to wait till tomorrow to critique it a little bit. I like this candle a lot, and obviously, I bought this shit today, and I talked about this. I bought it yesterday as well, right? And so, yes, you lose some money yesterday. We'll see if we were able to gain it back this week. This candle here, it could go both ways, right? In terms of bullishness. This idea here, though, you're getting a discount to buy down here. The upside is the exact same. It's the exact same upside. It will gain back through this, and we've seen this happen a lot. And that's why we take these growth breakout trades, or we take the growth pullback trades when it's a lot of volatility, because this kind of price action will happen. You'll catch back up very quick, right? I've talked about this a lot, and you guys have seen this, where we have this price action where you catch back up very quickly, and then you go back onto the trend, right? And that's in somewhere in this area, right? When that velocity changes is when we transition. And that's when we went from a short-term trade to a long-term trade. That's how we traded the Qs, right? Through excuse me, not just the Qs, but through the growth breakout from the 25th here, we traded short-term, right? And then we switched it up into long terms, right? And we started trading through here. These are more short-term trades, and I'm sure anyone that bought in here was definitely pulling the trigger on more short-term, because if you're going to buy something here, it better go up, whether you bought long-term or short-term. So you might as well buy shorter-term and get paid for that move quick, right? And so that's where you take this short-term trade. As long as you get any sort of price action and back up to here, again, you're doing the exact same trade, but you're able to get in at a lower price. And it's more time. And that's where you get the ability to go transition that trade and make some money off of that, off of your ability to get in and out very quickly, right? And so the growth side, I think this is probably better. It probably is better for us that, again, if you're anything like my portfolio, I get 90% value, and that other 10% that I'm playing with growth, I would rather have it swinging around like this all the fucking time. Now, I didn't think it was going to be like this at all, right? I didn't expect this, but this gives us an opportunity to buy this every time. And if we do get a swing up, which, again, there should be higher probability for, and again, look at the price action today, then without these pullbacks and the ability to do this, right, We didn't get paid. The only reason we got paid on this trade through here is because of all this. If this comes up to here, the only reason we're getting paid here is because of this pullback and the fear selling, right? And so for growth to react to this interest rate idea is perfect because we're getting the opportunity to buy and our value trade's going up, right? As buyers and using that bias, we're not going to change the bias, right? And that's where it's important not to lose confidence, where if you took those trades yesterday and you get stopped out to buy again today, and even if you get stopped out immediately at open today, we took the trade again and it's already paid on paper, right? It may get erased by open, but that's not where it is right now, right? And you can see it, and it definitely looks like continuation. It's important to be doing this, right? This constant sort of flow back, sort of from one thing to the next, right? Now, I do want to talk about the importance again of adding on to bullish positions that are already doing well. And I'm going to use healthcare as the example here. So this open, or from this morning when we had the pullback, right, I started adding on extra. I added more onto X on the pullback from my Friday position. And then things like Anthem and, whoops. Why am I always doing that there? Doesn't pop up on the first thing. Anthem, United, all of our bios. I started adding more to these as well through value. You need to know when, and I actually did this, we talked about this yesterday. You need to know when it's time to add more to a position that's doing well, right? We've done this with banks, we've done it with energy, we've done it with industrials, and I did it again with healthcare in a few different ways, even entering more on the bio side. The Moderna was a good example, and then through some of the heavy hitters like Anthem, United Health, adding more to these is an important. I don't know if it's so much of a skill or how you ever want to call it, but there's a trait there to be able to add on to a position that's not easy to know that it's a good decision to do. These are very important times where, again, you have a moment where tech is selling, and you think about it in terms of the market. If an institution's selling tech, what are they doing with the money, right? They're rotating and buying something else. You need to do the same thing, but you got to do it faster. And that's where you got to just go. You have a position that's doing well. I've been in this Anthem position for what, 3 months now? You got to go add to it. Put more into it, right? Yes, if you've been gaining and profiting, you're on paper, you're growing the position. It's different than putting more money in. This is where a good example of this, and I think it's important, is I talk about this idea of having your money in the market all the time. Think about it in terms of compounding, right? If you do a calculation of your portfolio compounding a certain percent every year, it's important that you're adding money into that. If you look at the difference between, let's say you have a $50,000 portfolio you start at, and then you look at the compounding over, let's say, 10 years or something, right? Over 5 years. And you're compounding that, let's say, every month, a few percent or something, right? There's a big difference of just having that starting amount of $50,000 and adding another $1,000, $2,000 a month, right? If you're adding in that money every month, it's significantly different. You're talking about your exponential is entering that curve significantly faster. It's the same thing with these positions here, where if you have money, you put a flat amount of money in, and you're just riding it, and you're like, oh, this is great. I'm doing great, honey. We're doing well, right? You're losing money on other trades, though. If you're not adding money to this position, it's just one thing, right? If you're adding money anywhere, even if you think, again, it's already increased quite a bit. It doesn't matter how high you're entering it. That extra money you put in, you're going to be gaining more on that. It's a big difference. If you have something that's working, you bet on what's working, right? You don't bet against. It's almost like betting against, right? Even if you have a position, but you have a little, you get a little pussy foothold, right? In a position, you get a few bucks in there. It's a lot of times not enough, right? And if you have something that it's your biggest percent gain, but you only had a few $100 in there, a few $1,000s, right? For some of you big boys, you get 10 grand on it, and that's it. There's nothing more. but you've got 100,000 in cash that you're just sitting on for no reason because you're like, well, I don't know what I want to do. If that money was in that position that's been gaining, then you'd be in a different position, right? It's more than just putting it on one. This is where you get exposure to multiple things. You increase your sizing overall. So again, we've increased sizing on banks, energy, industrials, healthcare here, through the healthcare through bios, right? It's important to be doing this and to know what's sort of what your tiers are, right? What is exactly the opportunity right now? Well, we're taking advantage of growth pullbacks in the volatility there. The value side is a constant trend. It's constant. It doesn't really change, right? We're not seeing much change here, right? Now you can look at this as volatility. It's really not, right? And I'm going to put the weekly chart on. Look at this fucking chart. It's really hard to sit here and act like this is not one way, right? You haven't had to do a thing. And we're talking about options as well as, it's not just from the underlying perspective, it's through the options. You can just sit in options. How disgusting is it that you can sit in options through this idea, right? You don't even need to worry about day to day, even week to week. That's what this chart looks like, right? It's too consistent not to be adding more, right? You should be adding more. Now, again, we've been pretty good, I think, at timing, and that's an important factor here. Like I just mentioned earlier, you get this pullback today, it's a significant difference to buying at a low here, adding onto that position, because the gain from that low to the high, or really just back to where you started, is a lot, and it's happening. There are certainly, again, there are certainly institutions, funds out there that are using some game theory here to position themselves to get a very quick buck, right? You sell the underlying, go pick up some calls, and then all of a sudden it's back to break even, and now you just gained, 50% on the calls while the underlying lost 10%. And you maybe lost 5% on the underlying shares they had, right? But you gained it back significantly with the calls, right? Or you're creating a momentum trade, right? And there's a lot of different charts that you can look at that look like that. I think the retail stores thing from yesterday was the most obvious thing in the world. Knowing the timing here today, again, we weren't perfect, but we reacted pretty well, I would say. And I keep saying we, but myself, you guys, if you were making the trades, taking those opportunities there, I think is it's hard to do, but it does pay off, and it's paying off because everyone else is doing it, right? Everyone that sold today bought. They bought. Did anyone exit long positions? I don't think so. And if they did, they rotated, and you captured it through that rotation. That's it. The money didn't leave. Go look up flow data. There was no outflow from equities. No outflow, right? We know there's inflows. If we look at the macros, the dollar didn't increase today. It didn't. You can act like it did, but it's still level from Friday. And we knew that there was a difference here because, again, the other markets were closed. That had a factor to do with the dollar increasing here before, right? When you look at bonds, again, there's buying. There's not selling. And so everyone's spending money still. Cash out there is going to be spent. Buybacks will be done. Banks today, I can tell you from experience, this is a buyback. This price action right here, it may not look like much to some people. This is a buyback. If you can't see from this open here, I talked about this open. I talk about this, or you see this in the past, and you see this every now and then. You'll get this idea of a New York fake out. Basically, New York traders will sell during the open, right? And it's usually coming from pre-market selling. It'll cause momentum. what they'll do is they'll every bank and everybody has periodic orders, right? They're buying every single day. They have some prime. Somebody's going through a prime and buying a certain amount every single day. I talk about this. We've been talking about it, and I've been watching, right? What you do is you have your prime not buy. You say, listen, just pause it. Don't buy it at the open. Wait until 10 o'clock or something. Wait until 10 o'clock to start my order. And what happens? Well, as soon as that order that's usually there doesn't go through, the spread all of a sudden widens. There may not be more. Listen, this is not more selling. This isn't more selling. It's not like more people started to sell. It's that the spread is widening. And so all of a sudden the price gets down here a lot quicker, right? There's just a lot more speed that's not through extra volume. It's just through a higher spread because the usual buy orders that are in here are not there. And so all of a sudden you get down here really quick. And what happens? You start to buy and the orders start to come through. This type of thing on the bank side, this happens all the time. It happens all the time, right? And it's really straightforward. And that's where things like the Dow, it's like, yeah, I thought it was going to turn a little bit quicker, but it's basically the same value. And we increase. And again, this is just from Microsoft and Apple and CRM affecting the Dow here, right? So again, I think pretty fucking spot on here on what's going on. I do believe that, and I said this yesterday, and some of you will find it funny, right? I said that we had some game theory going on with retail, and I think we're going to have it continue today. That's what it looks like. Does it not seem like someone's playing with putty here, right? Doesn't it feel like a little bit of playing a game a little bit where you dip down all at the open and then all of a sudden we're up now on the day, right? What is that? And what is that action last week? We get great economic numbers and people sell, and then all of a sudden Monday open we're buying, right? And then today, what is that? Do you really think people don't know what they're doing, right? Or people just randomly making decisions? No, of course not. Of course not, right? It's very choreographed. And that's where the buyback thing I've been talking about. If you don't think these companies didn't buy back today, you're crazy. You're out of your mind. If you don't think Apple isn't in here, that one dude that works on Apple's trading desk, he's on his iPhone. If you don't think they bought this today, you're out of your mind. Right? You're out of your mind. Google bought at the all-time high. They probably bought more. They probably bought more. Right? Don't be worried. Be confident. It's, again, we're not going to use... I talked about we already knew it was going to... I already knew it was going to happen. This idea of hindsight Nancy, right? We can go, well, in hindsight, obviously... No, that's why in the moment we know I don't want to say this in hindsight. I don't want to go, I should have bought that because I'm looking at it in hindsight. And I've been talking about this for a few weeks now. The best day to buy is yesterday. I don't want to have to be right here and saying, wow, I wish I bought that. That's why through this whole fucking morning, I said, that's an opportunity. We're going to buy it. We're not going to be a pussy. We're going to do it, right? And if you don't, you're not going to have fun. And it's going to suck. The ride blows. This is the worst ride of all time. Because you're rallying through all-time high week to week, but then you get a dip like today and it might hurt. But if you're not taking advantage of it, then it just hurt and pain for no reason, right? You should be getting paid on a day like today. And again, there's no excuse for being only a day trader right now. Or that's literally all you're trying to do is find. You think this quick buck idea of you're going to go take a trade and then get out and get 100% or something here from one trade. Your portfolio needs to be positioned through what's working. If you don't think today is a good example of that value trade, just saying a big fuck you to everyone else that's trying to make all these other ideas work. Like, think of people that are still trying to trade SPACs or something right now. Like, how brain dead do you have to be going through that angle, right? You got to, again, start with what's working and build from there. And if you're having a great time, right? You're having a very good time because it's the rest of this volatility that that you get to then have fun with, right? And that's where we get to have these trades like today and yesterday, right? Where the market's kind of sucks, but you're taking trades that are fucking great and you get to tell someone about, right? These are great trades, but you don't really get to go take risk if your whole portfolio is a risk to you, right? If your portfolio is not is not really doing well and is not safe, and you have your whole thing is a bunch of junk and risk, then it's kind of hard to add risk to it, is it not? And today probably fucking sucked, right? If you've got a nice portfolio that, hey, you might have lost a little bit, but you're in long-term positions and you're climbing and you're holding on, you're buying every now and then you can, on a day like today, be risky and go buy things. And hey, sometimes it's not going to pay off, but you get to do it more times than not. And more times than not, it's going to work. That's what you get, right? That's what you get. And so find out, again, balance it. You got to find a balance. If you had a tough time today, right? And this will be my last comment. We'll get out of here. I think some of you made the comment of you picked the wrong, I think it was you, Spoon. A lot of you have said the same thing. So not to mention anyone singling them out. The idea of picking, you picked the wrong ticker, right? Again, today's a good example where maybe you picked the wrong ticker, right? You picked the wrong one here. But, right, look at what kind of happened today, right? Everyone's going to say they picked the wrong one, right? Everyone's going to pick the wrong one. But if you do it every fucking day, you only need to pick one, right? You pick one, and if you get stopped out, what do you lose? What did you lose? You lost 1% or 2% on that order. You go take a trade today while still obviously having a portfolio. You try it 100 times and then you finally got one today. It's going to pay, right? It's going to pay for itself. And it's just about being consistent with it, right? And this is where, really, I should have made the point more of picking the wrong one. If you're looking at everything, you wouldn't have picked the wrong one today, right? Today, everything pulled back. Everything pulled back. But if you looked at everything, then you knew what to buy, right? And that was the difference. I should have made that through more of the point. You don't know which one to pick, but if you're watching more and you have exposure to more, you're going to pick the right one. How many of you picked up X today? Well, it's because you knew to fucking look at it, right? You knew to look at it and to go trade it. And that's where the more of these ideas that you have, the better of a chance that when a pullback starts to happen, you can go hunt and get confidence to go buy them, but you're not buying the one that you don't know. It's sitting there, it's not moving, and you're going, oh, fuck, I picked the wrong one. Then go do something else, right? Do something else. And that's, again, where you can add on to positions and you have things that are doing well. And you can go look at the Dow and go, holy shit, I did the right thing here because it's fucking obvious. How many times do I got to slap you in the face and tell you to buy the dirty Dow, right? Buy the dirty Dow, right? Use the UDOW if you need to. I used this today. Use the UDOW, right? I just posted this chart. Now you can say, again, for this idea, you can say that, yeah, we didn't continue the move here. That's not the point. That's literally not the point. The plan is still intact. You lost some time. You buy on the support. This is a lot of money. It is a lot of money. So, again, having your eyes open and not driving with your eyes closed. Today, even if you didn't make money, this is the more important part. You can be break even and maybe lose a little bit. It's about not losing what the market lost, right? And that's where a lot of the idea through this value side, it's just fun to be break even while a lot of other things are down. And that's the whole point, is you don't lose anything. We all hate to lose. If your positioning was correct here today, which again is not easy, but if your positioning was correct, you didn't lose anything. And you get to wave as everyone else goes down, right? You maybe you didn't gain anything. You're not going to have a green day every single day, right? Overall, I had a red day, right? Have a red day. But you didn't lose that much probably if you were in these positions. And that's the best feeling. And that's why you can be It's just one day, right? I don't really care about one day, but it's a day like today you can feel good about, right? And if you didn't feel good, then this is your opportunity to go get in that position, right? We know portfolios are being fleshed out right now. There's more rotation. You've got plenty of time to go buy onto these ideas, right? Today was a nice moment too. If you didn't, it's okay. Fucking, you got 250 something trading days a year. You're gonna be all right, right? So, I think this is a lot of fun. I can't wait to see what the rest of the week is because, again, we needed some volatility. I mean, desperately needed some volatility. Um, the spot VIX obviously didn't fucking give us anything. You get a one spike deal, and then we're back to zero. So, I mean, again, this kind of sucks that this does kind of suck, but we know this doesn't really matter. It's through the IVs, which is where we operate. So we're a part of the volatility, trading through options. So if you're buying at the money options, then you're getting exposure to long vol. So that's the important part. That again, if you're buying at the monies, then you're at the highest gamma, which means you are betting on more volatility. Which, if you were in positions before today, then you did well. So, and if you took new ones, then for sure you're doing well. So it's gonna be a lot of fun to just see how sort of the rest of the week flushes out. And I don't know. I really don't know. So that's why we just interact with price. That's it. We don't have ideas or opinions that create the trades as much as we have ideas and macro sort of biases that influence what we see with the it is basically influence the way we see price in such a way that when the technical lines up, we say, okay, that's tier one, this is tier two. So there's something we want to buy first on support as opposed to something else. If that doesn't work, we move to the next thing, right? But again, everything is through the price. When the price reaches a point, we go, okay, let's support. Time to pull the trigger. Doesn't matter what it is, right? But we do go through the ideas first, which is I bought value first. But then as the pullback happened on growth, I go, okay, I'm going to get a piece of that still, right? So even though it's a lower idea, it's still something I'm going to take advantage of just because the price basically says to. Why not, right? We will see tomorrow. I'm not sure about much for charts tonight. There's going to be a lot of interesting sort of value charts still. So we'll see what those look like. I don't want to post any more energy charts or oil or anything like that. I think we've got enough of those. So I'm going to do some digging today. I'm going to look at every chart on the exchanges. So it could be a long night, but we'll see what I come up with and see what I see. Overall, our list is if you haven't seen the list, definitely look at the list. I'll post this most recent one with everything from I can't remember what the last date is, but it's like everything from the last 2 months or so, 3 months. I'll post this into chat right now, just to make sure you have the list, because this most recent list has been very good, been very active, and a lot of opportunities every day. So again, it's just all the tickers I post from charts, right? Put into a watch list. If you have those, it's again, I would say the tickers that we are a part of certainly have the most velocity. That can be good or bad, but it's been working out pretty fucking well. So we'll see. I will see you guys in the morning. Have a good afternoon, evening, night, wherever you are. And until then, enjoy.